Yeah, thanks for the opportunity to speak to you all today. Just dialing in from Vancouver. I will share my screen and presentation. In terms of guidance, I was expecting to speak for maybe 15 minutes on the company and then have Q&A. Does that work for you, Julian?
That's absolutely possible. We have still 28 minutes to go, so feel free to extend a bit from the 15 minutes to maybe 20 or so. But I'm sure no matter what, there's going to be a lot of questions. The subject is extremely interesting, so please go ahead.
Great, thanks. I'm very happy to share this deck once we're finished as well. So this is a company I started almost 2 years ago. My background is I've been involved in carbon markets since about 2006. A PhD in environmental sciences, and I've worked in climate science and carbon markets through the first wave of voluntary markets. Was involved in making the 2010 Winter Olympics carbon neutral in Vancouver. We created a program for that. I also established the Great Bear Rainforest Carbon Project on the west coast of Vancouver, Vancouver Island, and the west coast of British Columbia. So I'm not new to this market, and what we tried to do in sort of summary with this company is build a business that would supply carbon credits at the scale to meet the rising demand, particularly from large corporates, in terms of the volumes of credits that are coming into the market. So we have a leadership team that's developed over 50 million tons from 6.5 million hectares of conservation. To date, our current pipeline is about 43 million tons of credits. The demand is coming ultimately from large corporates. Companies worth about 1/3 of global market capitalization have already made commitments to go net zero and carbon neutral. They can do that through internal emissions reductions within the companies, but ultimately they're going to have to come back to the carbon credits market to purchase emissions reductions somewhere else. And Mark Carney, the governor of the Bank of England, set up a task force that suggested that market would grow from around $1 billion to around $30 billion by 2030. So our approach to this, coming back in and building a company from scratch, was to recognize that most of the developers in the carbon space at the moment are small-scale environmental technology and engineering companies. They have projects that are also small-scale in terms of the amount of land that they cover. They're focused on technology and nature-based solutions and a range of other different projects. And what we wanted to build was a dedicated platform for nature-based solutions. So focusing on avoided deforestation, conservation, and restoration, particularly in tropical countries around the world, and to approach that with the same kind of contract structures and approaches that you would see in natural resource and oil and gas extraction. And the reason we do that is that's how you deploy capital at scale. So we work on the basis of large-scale concessions, revenue sharing agreements with government for public lands, and then very large-scale aggregation of private land ownership, particularly in Africa, where about 80% of the land is owned by 80% of the land is owned by smallholders. We have a portfolio of companies, projects now in Sierra Leone. We're working in Liberia. We're in Suriname, Yucatan, and Guyana. And in all of these projects, the model is that we de-risk the projects with our own capital, and then we secure pre-purchase and offtake agreements from large corporates and large trading groups, trading and commodity houses. And we've talked to everyone from Macquarie to Mercuria and Glencore to get them interested in these pre-purchases. So you have a sense in this slide just of the scale that we're already working at. We think this is the scale we need to be at to meet this kind of demand. There's no point having sort of folksy, cottagey, small-scale projects. They need to be at the jurisdictional scale and covering entire regions, which is why our agreement in Yucatan is with the government of the state of Yucatan rather than just with individual project owners. Our first offtake agreement in Sierra Leone was a $2.5 million pre-purchase. So we've invested about $2 million into the project. The $2.5 million covers all the remaining capex for the first 5,000 hectares of planting. We plant those trees. As they grow, they produce credits, and we repay the buyer with about the first 150,000 tons of credits that produces. And then the balance of the credits get sold for at market prices based on a market index price. So effectively what we've done is use our risk capital to develop the project to a certain stage, and then contracted with the buyer to invest on a pre-purchase basis to cover the balance of the capex. So, you know, what that means in this case is a project that had $2 million of investment by our company. generating $110 million of revenue over the lifespan of the project based on fairly conservative carbon scenarios, because the buyers in the market are so desperate for credits that they'll purchase on this basis. Here's our board, which you can look at in more detail afterwards. Highlights, I would argue, include Abiyomi Akinjide, who's one of the top natural resource lawyers in the UK, works for Fasken Martineau and joined our board as a senior advisor. This is our executive team. Here I would highlight Kev Godlington's experience, who's been on the ground in Sierra Leone and West Africa now for 20 years and has built and established the relationships that allow us to run these projects. As I said previously, the demand for these credits is coming from large corporates, Shell, BP, Total, Apple, Nestle, all have made net zero commitments. What's changed in the last 2 years is that in the past, they could make these commitments and they were non-binding. Now they've made these commitments, and the regulators, the SEC and the EU, have all said, well, if you're telling investors you're doing this, you actually have to have a plan. You have to actually have to show that you can deliver on it. And so they increasingly expect clearly laid out plans for getting to net zero. Those commitments, as I said before, represent 1/3 of global market capitalization. And we're talking to many of the companies on this list here, and they're all actively investing. In fact, the oil and gas companies are very aggressively investing because they've had very profitable periods because of the Ukraine war, and they have more pressure than ever from their shareholders to show how they get to net zero. This slide just shows why we focus on nature-based solutions. The Mark Carney report indicated that there's practical potential of between 8 and 12 billion tons of carbon credits. We need to reduce emissions by 23 gigatons by 2030 to stabilize temperature rises. But 65 to 85% of those tons can come from restoration and conservation of forests and mangroves. So nature-based solutions are the largest source of credits, and they're also typically the lowest cost credits in that entire system. So we're very focused on nature-based solutions. We think the ability to restore and reverse something like 185 billion tons of deforestation since the beginning of the Industrial Revolution is one of the biggest opportunities to slow down and reverse climate change. So the problem has been this untapped potential in the market. It's supply constrained. The production is highly fragmented and underdeveloped. It's led by technical and consulting companies. And we wanted to approach this through the lens of a resource management company. And the characteristics of that are establishing benefit sharing and concession agreements with government, doing the technical work in advance. And just as you would never build, an LNG plant or a natural gas plant without having an offtake and pre-purchase agreement in place, we're not building these projects and investing in them until we know that we have buyers for them. And that's been a sort of a centerpiece of our strategy from the beginning. So we only build these when we know that the buyer is there at a pre-agreed price to cover all of the costs. We tend to target highly productive, low-cost tropical jurisdictions. When we're based in Canada, where we have lots of trees, I'm often asked why we don't do more Canadian projects. Well, firstly, the land and labor costs are much higher, but more importantly, trees grow 3 times faster in tropical regions than they do in temperate regions. And it's not to say there won't be projects in the future, but we believe that allocating capital to the lowest cost jurisdictions where we can get strong carbon rights and land rights is absolutely key. And having a company that's not a sort of intermediate royalty or streaming company, but is actually based on an owner-operator model where we build and operate and run these projects ourselves is absolutely key. Some of the precedent transactions that we speak to, just to give people a sense of the scale. Delta Blue Carbon in Sindh in Pakistan, 350,000 hectares, sold most recently at $29 per ton in June 2023. We've just been told today, actually, that the latest pricing that they're looking at for their 2026 vintages of credits are above $50 a ton. So mangrove projects of this type and forestry projects are getting very, very high pricing. Wildlife Works has a contract with Hartree, which is a large commodity trader in the space, who've been committed $200 million for project development costs. So very good precedents for the scale at which we're operating with a couple of these large-scale projects. We're working across these countries. In Mexico, we have a binding agreement with the government of the state of Yucatan. In Guyana and Suriname, we have very advanced agreements and signed by the president of the Office of Suriname when we had a groundbreaking last week. In West Africa, we've got projects in Sierra Leone and extending out into Guinea and Guinea and Liberia. And then we're exploring projects in other jurisdictions, including Mongolia, including the DRC, and including Angola. But at the moment, we have for those 4 jurisdictions under contract. Typically looking at 500,000 tons per annum, 20,000 hectares minimum, reforestation, avoided deforestation, and blue carbon. We use Vera as the sort of global clearinghouse for all of our projects. And then just in terms of the economics of these projects, to understand how we invest our capital, we're typically spending $500,000 on the first 3 stages here, $500,000 to $1 million on at-risk exploration, site development, and quantification of reserves. From that, we then have a PDD that we can present to buyers and then secure offtake and pre-purchase agreements. And once we have those in place, then we can move to invest in the actual project restoration or conservation work. And so, from a 400 tons per hectare project from mangrove conservation, $500,000 spent in advance could generate an initial windfall of 1.2 to 1.4 million tons from that project, worth $16 to $24 million. So our equity, our use of risk capital, these aren't like large-scale infrastructure or refinery projects. Our CapEx is pretty limited relative to the size and scale of the production from these projects. I always show this sort of stylized graph because we do restoration work where we're planting trees, and we also do conservation work where we're preventing them from being cut down. That mix of different project types gives us a sort of interesting cash flow profile. So in our conservation projects, we get an initial bump in the first year of the project where we can monetize the credits and sell them over 1 to 3 years. And then the balance of the credits from the mature forest are much lower. Where we have a restoration project, it takes a while to ramp up, and then the full production isn't reached for 50 to 80 years. And we think that by having this mix of conservation and restoration projects, we'll be able to use our capital in Sierra Leone, for instance, to fund the restoration projects in that country and in other jurisdictions. This is available on our website. This is just the status of our existing projects, the sort of scale that we're operating at. In Sierra Leone, we have 2 restoration areas of 25 and 32,000 hectares. We have 5,000 hectares of mangrove restoration and 3,000 hectares of conservation. In Yucatan, we have something like 10,000 hectares of mangrove restoration. And in Suriname, as we announced last week, we have something like 25,000 hectares of 25 to 30,000 hectares of restoration, which will avoid very large volumes of methane production. This is also available on our deck, just gives you a sense of the growth and trajectory of the company in terms of revenue. This is assuming we just invest in and then monetize all of our existing projects. We don't add any new projects to it, which of course we will do. We think we reach somewhere around 100 million in recognized revenue in the next 10 years. 30-year forecasting, somewhere around $1 billion based on 26 million tons. So full project forecasting over the lifespan is $2 billion. And again, that's based on less than $10 million invested in advance so far. So these projects create very strong annuity revenues. They're set up for 20 to 30-year offtake agreements, which is our first agreement is a 20 plus 10-year agreement. So once we've invested this money up front, we get very, very strong long-term returns. This is just some of our milestones over the next 10 years, which we can go to in a bit more detail if we want to. This is sort of the profile in terms of revenue relative to costs. This shows out over the full 50 years of projects, the ratio between our upfront investment, which is around $48 million, to about $2 billion in revenues over that period. And increasingly, although 50 years sounds like a long time, we're increasingly seeing buyers that will pre-purchase an entire long-term offtake from these projects for 20 to 30 years, just to meet their obligations. In terms of the specific projects, just to wrap this up, we have Sierra Leone mangrove conservation, potentially 1.5 million tons within the next 12 to 18 months. $40 million of revenue from that project. And because the CapEx is so low, a very strong project IRR. Our 2 restoration projects, based on current assumptions, something around $760 million of cumulative revenue over the life of the project. Net to the company is about $460 million, up to 500,000 tons of credits per year, slightly more for the second restoration project because it's a bigger land area. Mangrove restoration, we've already planted about 15 hectares in Sierra Leone alongside about 1,400 hectares of forest. So we intend to plant about 300 hectares of mangroves this year and then plant out the balance of the 5,000 hectares over about three years, resulting in a very large area of around 5,000 hectares being restored. Yucatan mangrove restoration is also progressing very well. This is really about restoring tidal flows into the project areas. And then Guyana, we have an agroforestry project where we restore areas with sustainable coconut production that produces coconut water as well as carbon credits. So some very strong forward-looking revenues from that project. And then the mangrove project in Suriname, which we just announced, is past all the feasibility testing. Very large area of land that we can restore on the coastline of Suriname. We expect that one to take maybe 18 to 24 months to complete, but the benefits of that are going to be very large. So I'll stop there and pause and maybe open up for questions here.
All right, thank you very much for the presentation, James. Maybe let's start with actually the last slide of your presentation. You had the share structure there. This is something that is, I think, is a bit different than what there is in other publicly traded company. Surely due maybe to the fact that this is not a capital-intensive operation, as you already pointed out a few times. But it would be great if you could walk us through that share structure.
Yeah, so we set up the company into a halted listing, and we vended in assets into that listing. So myself and the other 2 founders took projects we were already working on that were privately held and vended them in. And so the 3 of us, between us, myself, Kev, and Neil, own 35% of the company as a result of that. We just participated in the private placement. And then the other founding team and directors were subject to 36-month escrow at the time of founding. So it's a little bit of overlap between the management team and founders, but we're close to 50% insider held with 87 million shares outstanding. We didn't do, in the initial financing of just under $10 million, we didn't offer warrants with that. So we don't have a cheap warrant overhang that's going to come back at us. In our most recent financing, we offered a full warrant, but at 25 cents with an accelerated conversion clause. So we've managed to keep a pretty tight share structure without that sort of risk of lots of warrants and cheap stock coming back at us at any time within this. We've traded with very strong volumes in a difficult market, so 200,000 to 300,000 shares per day, and we've done a lot of work on outreach and marketing. All disclosed, all very much sort of the high quality end and good sort of engagement with media as well. So we have a pretty strong following, and we just recently listed on Frankfurt just in the last 3 weeks.
Okay, that's great to know. Something else, is there a difference in the carbon credit price where you, for example, conserve a forest versus when you reforest? I mean, they seems to be different. Are they actually considered different?
Yeah, I mean, in the end, a ton of carbon is a ton of carbon, and they should be identical. But in practice, at the moment, the big buyers are more interested in reforestation projects than avoided deforestation. So for mangrove restoration and conservation, we're seeing prices in the $25 to $35 a ton range, sometimes as high as $50. In the restoration projects, we're seeing $15 to $20 a ton. For conservation projects, because they've been under a lot of pressure and there's a lot of supply there, they're typically below $10 a ton. So it's interesting because it's, a ton is still a ton. They're identical in their quality, but the market is definitely putting a premium on restoration projects, which is the area of development we're in. Perfect.
In that case, when you do come with a mangrove project, how do credit buyers are able to find the project you're working on? What's your to market strategy?
Yeah, we actually started with a customer discovery process where we talk to all of the largest buyers in the ecosystem, in the buying ecosystem. So we talk to all of the large oil and gas companies, we talk to the tech companies, we talk to all of the large commodity traders, so Mercuria, Macquarie, Hartree, Trafigura, Glencore, and we got pricing indications from them. And then we ran a competitive bidding process with our data room for Sierra Leone, and we had 16 different groups review that, and 5 of them submit term sheets. So we run a sort of wholesale strategy of selling direct to the largest buyers and getting that kind of bid tension and price tension around it through a kind of a competitive auction process. We certainly will expand the reach of that, but the terms that we got on the initial pre-purchase agreement were, I would argue, the best terms anyone's received in the market for pricing.
Okay, and how much capital is needed per year? So basically, when are you going to be able to have a cash flow positive versus CapEx deployed, OpEx, new project and revenues?
Well, our pre-purchase payments are received as deferred revenue, so we'll receive within this year $1.5 million US. And those are applied to project development. So we actually receive them as revenue into the company, a total of $2.5 million. Early next year, we expect to have pre-purchase agreements in place for the conservation and the restoration projects. The conservation projects won't be deferred revenue, they'll be direct. And we think there's somewhere between $16 and $24 million of revenue, depending on kind of final pricing from the sale of that project. So we'd anticipate some big revenue events in the middle part of 2024, in addition to the ones that we've already announced this year.
Okay. Are there any restrictions for buyers of CO2 certificates?
Not really. I mean, the way that the market is based on, the development of the market is based on third-party reasonable assurance standards. So the verifiers, the validators go out and they validate the projects on our behalf to reasonable standards of assurance. So anyone can buy those credits. We also work with the governments to make sure we're not double counting anything that contributes to the sort of the process in the United Nations, where in the Paris Agreement, you know, countries can also sell their credits. So we deal with kind of Article 6 issues. But ultimately, once it's validated and verified, anyone can come to us and buy those credits and apply them to their emissions reductions plans.
Okay. Is one of the objective of the company to have a strong strategic partnership that would actually not just buy per project, but give you an amount of CO2 per year and that you would have to fill up?
That's definitely part of the strategy, but the preference is to avoid having a single party that provides that. So we don't want to get in a position where we have one large buyer, because we're still a small cap company.
Yeah.
We become sort of slave to that one large buyer. So we have one Fortune 100 company now in Sierra Leone that's bought our terrestrial project. They will probably upgrade that to 25,000 hectares sooner rather than later. And they're in a site visit at the moment, actually, in Sierra Leone. You know, our preference is the next sale, let's say the mangrove project, is to a different party. So if we end up with 3, 4, 5 strategic partners that know all of our projects but have rights to one of them, then that's better than having one big buyer that ends up, you know, effectively owning you and putting more and more downward price pressure on you. So we like a bit of diversity on the buying side.
And how is the reforestation assessed?
So it's evaluated based on ground measurements of existing forest areas and of the conditions. We go into the field and measure the conditions in the field prior to the planting. Every tree that's planted is tagged with a portable mobile GPS system, so we know the exact location of it. We revisit the sites a lot in the first year to manage do weeding around it basically, and do irrigation. And we can do that because labor costs are very low in places like Sierra Leone. And then because we're GPS tagged, we can track the growth of the trees increasingly by satellite over time. So we work with Earth Daily. We have our own platform called Tree Counter. We're working with satellite companies to get the best data possible to track the trees over the 20 years of their growth.
Perfect. And how are the certificates emitted? Specifically, every year, or every month, or every 2 months?
Yeah, they're typically issued annually. So at the end of each growing period, you'll have a verification which will tell the market or tell the buyers how many tons are actually produced by the forest in that period. They're then registered at the Vera registry. So each ton gets an individual serial number. And then a buyer can come in and can buy those tons and retire those tons. So there's no risk of double counting, but it's all in a centralized static database. That's how this all works. Perfect.
And outside of the CO2 positive impact, are there any other positive impacts? For example, more rain, better soil, fresher air, better climate. What are the other benefits that the region gets from it?
There's with land restoration, there's definitely benefits in terms of moisture retention in the soils. We're planting native species, not plantations, so we're restoring the traditional biodiversity of the area. We're also applying huge amounts of employment to local people where there's very high rates of rural unemployment. We're paying smallholders an annual lease fee for their land, so they're getting paid to see the trees grow, and then they're getting hired to plant them. So that the total revenue that flows back into the projects is close to into the communities is about 30% of the total revenues from the project. So it's a huge economic and social impact in these regions that are otherwise very poor, and it's also a huge impact in terms of biodiversity. Flood mitigation from mangroves as well is very, very important.
Okay, perfect. One other thing also, you're in a region more tropical and so on, but what about fire control or other hazard that we're seeing going insane on the planet right now?
Yeah, there's definitely less risk in tropical areas, but the end of the rainy season, which is just wrapping up in Sierra Leone, it does dry out. And so we actually have fire trucks on site, and we do soil moisture monitoring using soil monitors and also using satellites. So in the first year of growth, we keep a very close eye on moisture levels and have fire risk management in place. It's actually a patchwork of plantings, so a fire in one place wouldn't affect the whole area, but we're just very careful to manage that.
Okay, perfect. And maybe lastly, this will be, as you said earlier, this will be a massive market. Who are your competitors and what's the size of them? Or are you a first comer, early adopter? What is it?
We're really the only large scale publicly listed owner operator of projects. There was one listed on the Dutch exchange, but that they came off that exchange. The others are royalty and streaming companies, and that model hasn't worked well because you don't really need them. You've got lots of you don't need intermediaries when the large buyers will offer the best prices in the market. So that our competitors in a very, very rapidly growing market are groups like Imperative, South Pole, Wildlife Works. But the reality is, we're the incumbent developer in each of these countries, and it's very unlikely anybody else is going to compete with us directly there. And there's so much opportunity at the moment. It's like like the Western frontier. It's like everyone's breaking new ground. We actually talk more often to our competitors than compete with them to try and ensure we're all doing the highest quality projects. So we don't really worry about that as a threat to the business.
All right, perfect. Well, that was a very interesting Q&A. Very, very interesting presentation, James. Thank you very much for taking the time with us to present at the IIF Forum. Sadly, it's 8 o'clock. The time is up, which means that you have been our last presenter and that now Mario Rosa will have the last word, James. So I thank you again, James, for coming and presenting with us.
Thank you. Appreciate the time. Have a good evening.